I mean, we are fundamentally growth investors, so we're not buying distressed assets and trying to make it better. So we are looking for sectors which are generally rising, right, and are growing, right? So for argument's sake, we're not the investors for Kodak, where your people are no longer using films; they're all moving to digital, right? Or we're not going to be investors in the postal service, because that by and large is declining, right? So we are looking for sectors where there are intrinsic growth characteristics, either the demand for those, it's a new product, and like for argument's sake, streaming, right, of like Netflix and so on and so forth. Not to say we're investors in that, but in some of the sectors we chose was for example convenience stores, right? That's a sector that's growing as the shift from unorganized to organized has appeared, or the credit bureau, which we own, CITOS, the largest credit bureau in Malaysia. And we knew we had to educate Malaysia about responsible lending and responsible borrowing, and we've introduced a whole bunch of products. So firstly is choosing the industry. The second thing we do is we actually go out and meet 300 companies a year. So we have some basic thesis. We start with, okay, we like the retail industry in Malaysia. So what we then do is we channel that team, and their job is to go and meet every retail company they can find in Malaysia. So they go on a Saturday, they list down every mall, they walk malls and they list down every shop, and then they write to the companies, and then they go and see the owners. And in this lengthy process and painful process of getting meetings and cataloging these meetings, we then identify interesting companies, right? And what are the characteristics of interesting companies? Well, firstly, we look for market leaders, right? We look for in each segment, like one of our most successful investments in Malaysia is Mr. DIY, right? Which is now a household name. And we found them from one of these exercises, and we thought, wow, these stores are really busy. It took us a while to convince the owners why to actually meet us, but when we met them, we learned a lot about them. And what we could see is they had a clear proposition that was resonating well with consumers, right? So there's stores are busy, people are shopping, and so on and so forth. We could see a very smart and capable entrepreneur who had high degree of integrity. So there's no point being smart with no integrity. Or high integrity and not capability. So you need people who are capable and have the integrity. So proposition, good entrepreneur, and then there's a report card. In our business, lots of people spin you a story about where they're heading.
Yeah.
But if you don't track their performance, you won't know what they said and what they've achieved. So often we see people over time, and we've cataloged this. When we have the third meeting, we look at the results and say, hey, you told us you're going to do, 10 million of profit this year, but actually you've done 8. What happened, right? And so there are very few companies that actually meet what they say they're going to do. And certainly Mr. DIY was one of those that, every time they gave us a number, they exceeded it, So you got a great business. The third thing, of course, we get into the financials, right? And, a lot of people get lost in financials. You can spend hundreds of hours and hundreds of lines of modeling. I look for really 3 or 4 very simple things. I look at the top line. How's the revenue growing, right? So we're shooting for companies that can grow at least 15 or 20%. I then straight away look at the bottom line and say, how fast is the bottom line growing? Ideally, we want the bottom line to be growing as fast as revenues, right? So that means the profit is growing in line with revenue growth. The next thing I look at is return on equity, right? So typically in Malaysia, the average return on equity for a company is probably 10 or 12%, right? So that tells you for every dollar of money that's been invested in the business, what kind of return are you getting? And if your return on equity is low, if it's single digits, then you shouldn't be growing your business because you're destroying value every day, right? And so that's a very important metric. The next thing I look at is the risk. What are the risks in this business, right? So the risks can be industry shifts. Is this industry going to be disrupted the way digital has disrupted Kodak, or streaming has disrupted videotapes and so on and so forth. So that's important, right? Risk on the entrepreneur. I mean, does he look healthy? Is he going to be around in the time horizon we have? And what are other risks that could affect you? Government legislation is an important risk. Competition is not one of the reasons for meeting lots of companies is all their competitors, and you have a sense of what the competitors' strategies are and how that might affect, market share, pricing, and so on in that industry. So risk is a very important assessment. And then finally, what should you pay for this asset? Which is it's a very difficult question, because it's not a science. Otherwise, we'd all have it right? So why does somebody think that Old Town should trade at 10 times earnings the day before we bought it, and a week later it was trading at 15 times earnings, and a year later it was trading at 20 times earnings, right? And I think the danger that a lot of young people make, who don't have a lot of history in investing, is they look at comparables only in the last 1 or 2 years. And they say, well, that company trades at that multiple. WeWork, trades at $47 billion, and that should be the benchmark for all co-working spaces. Well, the more important question is to look at what Warren Buffett would say, look at a 10-year history and see how have companies in this sector traded over longer periods of time. And then, there are going to be highs and lows, and you find some kind of, average, So if I had to summarize it, to find a good investment, you want to look at growth, return on equity, risk, and you need to be in a good sector with a great entrepreneur, and you have to pay the right price.